Hey everyone, welcome back to the Investing Iguana channel. I'm Iggy, and today we're diving into a truly historic moment for global finance. Gold has burst past the $4,000 mark. Why should this matter to you here in Singapore? Because what's happening internationally, especially with gold, is rippling straight into our CPF balances, HDB dreams, SRS portfolios, and those SGX-listed gold ETFs. More locals are picking up. Today, I'll show you what this means for our money and our future. Just to share a little background before we dive in, the Investing Iguana is now ranked 8th in the 2024 Influential Tigers on Tiger Brokers. We crossed the 1 million mark for reads, 58,000 likes, and have produced over 1,000 videos totaling more than 600,000 watch hours as of August 2025. I focus on connecting Singapore and regional investing to global trends, and today's story shows just how plugged in we all are. This episode is adapted from my latest in-depth Substack deep dive. What's our roadmap? First, we'll break down gold's meteoric run. Next, I'll explore why so many central banks are racing to buy gold. Then we'll tackle the ETF comeback, unpack US monetary policy's knock-on effects, and finally, consider what all this swirling uncertainty means for Singapore portfolios. Stick around for my personal take at the end, tailored to anyone thinking about retirement, security, or just keeping your money growing. Let's kick off. Gold passing $4,000 isn't just another record. It's a reset in how investors worldwide brace for uncertainty. For Singaporeans, it's a bit like watching everyone top up their CPF or dump fixed deposits for alternative assets. When things look risky, safety gets center stage. It's why we see more interest in SGX gold ETFs, CPF top-ups, and SRS diversifications. Gold's jumped this year, more than 50% up since January. It's not panic buying. It's something deeper. Changes in policy, geopolitics, and what some call FOMO, or fear of missing out. We're seeing local newbies grab their first gold ETF lots on SGX, sometimes swapping out of REITs when SORA rates fall. The question for us, what's driving this and how should we react? Here's a scenario. The US Fed starts slashing interest rates, and within days, MAS and local banks in Singapore are adjusting signals too. Gold's allure grows as deposit, SRS, and bond yields drop. When the Fed announces more cuts, a move to 3.75 to 4% in October and even lower by end 2025, holding gold starts looking better than chasing bank interest. Picture a table with the Fed's recent moves. October, December, and mid-2026 all see rates dropping, each cut pulling gold's value higher, especially for those of us hedging against interest rate cuts. The Fed is worried about unemployment. Their projections say more rate reductions coming, 50 basis points more this year, another dip in 2026. This means gold's opportunity cost falls for Singaporeans. If you're using CPF or SRS to balance risk, gold's role as a store of value matters more than ever. And there's the US government shutdown. Every week, with no new economic data, ramps up uncertainty, making safe assets like gold more attractive. Each lost week shaves GDP. That's fuel for gold. Now let's jump to central banks. Imagine reserve managers from Asia to Europe crowding into gold, like Singaporeans queuing for kopi on a hot afternoon. In 2023, the world's official institutions grabbed over 1,000 tons of gold. Regionally, Thailand and Indonesia have joined the rush, wary that US dollar reserves could be frozen or weakened. See the table. Emerging markets hauled in more than 650 tons. Eastern Europe scored 200 plus for sanctioned safety, and the rest added 150 plus for stability. Total, 1,037 tons, forcing the world to see gold not just as a shiny asset, but as a policy shield. Critical moment. The Russian asset freeze in 2022. Overnight, hundreds of billions were stuck. For Singapore, while MAS keeps our reserves diversified, it's a wake-up call on anchoring some value in tangible assets. Local investors should pay attention. Consistent, big bank buying puts a strong floor on the prices. Let's switch gears. Gold ETFs are surging. On SGX, more Singaporeans are picking up gold funds than ever. Globally, September saw the biggest ETF inflows in 3 years. Retail and institutional. Unlike wild spikes, this time it looks sustainable. CPF and SRS portfolio holders know it. Gold is becoming less of a speculative play, more of a sleep easy allocation. Check the table. North America led inflows with 4.1 billion. Europe added another 1.9 billion dollars. Asia Pacific clocked in at 0.8 billion, and globally we saw 6.9 billion. That's institutional muscle and growing local retail confidence. Singaporean retail investors, those buying gold ETFs or physical bullion, have doubled year on year. Not a wild chase, but calm, diversified moves. If you're shifting some equities or REITs to gold, you're in strong company. Now imagine you're shopping for electronics. If the US dollar is weak, your SGD gets you more. Same for gold. In 2025, the DXY index fell by 10%, making gold cheaper everywhere, especially for Singapore investors used to watching the SGD USD rate. When the dollar weakens, gold demand spikes. Another table, DXY down 10.5%, EUR USD up 8%, US real rates dropped by 180 basis points. All reasons why gold became the preferred play, not just for big funds, but for folks here in Little Red Dot too. Dollar gold dynamics used to mean when one went up, the other dipped. Not anymore. Real rates and geopolitics twist the old rules. As MAS shifts rates, gold's spot in our portfolios evolves. And every time CBOR falls, more locals pivot to gold. The world's in flux. Trade wars, debt talks, policy uncertainty. When giants like the US, France, or Japan get nervous, everyone feels it, even us in Singapore. The debasement trade, idea that fiat money will lose its shine, returns. For 92 trillion in global government debt, gold stands taller than ever. The table here is simple. Triggers like shocks, inflation, sanctions push investors to gold's safe haven strength. Gold blocks currency loss, shelters assets during inflation, and shrugs off sanctions. No wonder more Singapore portfolios are bulking up their gold exposure. Trade policy clashes, a fresh spat with China, or tariff drama always makes Singapore investors pause and pivot. Gold's neutrality is its strength. It's not about chasing drama, but safeguarding tomorrow. Momentum is the word. Investment banks now peg gold targets at $4,900 by December 2026, a whopping 23% up. Short-term dips will happen, but with central banks, ETFs, and smart households all buying, corrections look brief. Another table brings clarity. Goldman Sachs aiming for 4,900. World Gold Council forecast at 4,000 to 4,500. Even independents see 4,000 to 5,000 in 2026. When you see these price targets, remember, it's all about strong demand drivers and cautious money flows. Gold isn't just having a rally. It's being repriced as a true safe haven. Don't gamble on the spikes. Plan your gold as part of diversified safekeeping. For all full charts, checklists, and the written playbook, grab this post on Substack. Link in description. Here's my SG lens. Gold's rise is a global drama, but for us, it's a chance to rethink security, buffer risk, and mix up our assets. If you're looking at CPF, SRS, or even day-to-day savings, gold could make a lot of sense. Don't treat it as a jackpot, but as a cushion. Blend your ETF, MAS-regulated gold exposures, and keep to your plan. Resilience wins over excitement. Challenge for every Singaporean. Are you building a portfolio for easy nights or only fast returns? Learn from the journey. Stay diversified, stay smart, and keep your playbook fresh for tomorrow's risk. Let's recap. Gold's 4,000 run is reshaping portfolios everywhere. Lessons for us. Anchor your plan, don't chase wild swings, and use every MAS framework and SGX tool for robust, steady growth. Subscribe, like, and share if these insights helped. Join our member drive for first access to strategies and chart pack breakdowns for local investors. And before you go, watch my next video on CPF hacks and SRS playbooks, perfect for building your financial fortress in any market climate. This is Iggy, wishing your portfolio resilience and peace of mind. See you in the next episode.